Hello, I'm Mariana von Lucken and I'm an expert on innovative entities and what concessions they can receive. And one of the concessions I want to talk about is the employee share schemes for startups specifically. Employee share schemes is a bigger area, but I'm focusing on employee share schemes for startups. Now, what is the difference? The difference is that if you meet the criteria for the startup, and you get a better concession than if you're outside of these criteria. Now, take it a step back. Why would you be issuing employee shares? Well, if your company has a fantastic employee that works in your business and you want to reward them, and money is not an option because you don't have it, you might be a startup, you might have not enough cash at the moment until you develop the product you're developing. These concessions under the employee share scheme rules could be taxed, whereas under the startup rules, they won't be taxed. And that means they're not taxed when they're issued to you. They're not taxed if they're options and they convert or are exercised. They're only taxed on exit. So when the business is sold, how good is that? So this is great for the employer because it offers an opportunity to keep that person, to lock them in. And it's great for the employee. They're safe and secure knowing that they're not going to pay some tax accidentally in a year's time. And why I say that is because if you talk to someone down the pub, they'll say, no, don't go into employee share schemes because I got burnt, or you read something about it. And that generally would be true. Before 2015, the employee share scheme incentives weren't very beneficial, and you had to really think about structuring it. And if you didn't get the right advice, you could potentially have paid tax upfront, or even worse, you could have paid tax down the track somewhere. But they call it, you weren't in the money, meaning you could actually have to pay tax when you haven't sold them. So that was the issue with them then. So that's why I really recommend looking at the startups. Now, there's lots of information about employee shares for startups, so I'm not going to lie to you. Lawyers will charge you lots of money to develop one of these, and accountants as well, so that's myself. But if you go to the ATO website, there is an actual employee share scheme, an option scheme for free. It's available there. What we can do is just help you in the sense of using it and understanding whether you meet the criteria in order to apply it. And that's a big thing. There is, the legislation itself goes through a lot of criteria, and what we will do will help you and guide you through that and document it so that you can use that in the future should there be an argument about that with the ATO. In a sense, what's the cost to you? The cost to you is our fee. The ATO has kindly provided a pro forma of a lot of the resolutions and the actual agreement. You can have that looked at by a lawyer, and I'd always recommend it because there might be things that you want to change. If you don't want to spend that money, a lawyer may think differently, but I would say that you would still need to look at it in some sense. If you need to know more about it, please give us a call, send us an email.